Winston, good to see you. We have a good one today. Stop using the S&P 500 as a benchmark. When we hear
Oh,
headlines
yeah.
about the markets, it's often how the S&P 500 is doing. And the S&P, of course, has been on a rally lately. Take a look at this year to date, a lot of green on the board, which is why some of us look at our portfolios and wonder why it's not up the same amount. So why don't I invest in what's doing well right now?
Well, it's a matter of portfolio construction, okay? Oftentimes people look at this S&P 500 and they say, "I just want to follow the S&P 500." And the S&P 500 has one distinct difference between you as an individual investor. You are a human being who has timetables and events that happen in your life which cause you to have to get in and out of the market. The S&P never is in or out of the market. It just is the market, the S&P 500 index. So people get frustrated when they feel that their portfolios are not matching the performance of the S&P broad market because they're humans and they tend to make mistakes when they buy in and when they get out.
Well said. We all know, though, that diversification is important to long-term success, but market history has proven that a well-diversified portfolio will almost certainly underperform broad markets and most individual asset classes in the short term. So when we look at things like those tech stocks on the board making huge gains, what should we be keeping in mind?
Well, again, kind of like I said before, you keep in mind that you're a human being, that you have certain timetables, and the whole idea with a well balanced and constructed portfolio is this: we are advisors, we're not traders. We're not trying to time the market because that can prove fateful. All right. But
Mhm.
what we do is we build portfolios that are ultimately designed to work for the long haul and keep our clients' buying power up with and ahead of inflation.
hmm And when we see the markets going up, even though, of course, we all want to see huge gains, those big swings may not be in line with our risk tolerance.
No, not at all. As a matter of fact, as people get older, their risk tolerance tends to become more conservative, okay? Conservative, moderately conservative on the outside. And when they need to get out of the stock market, that just may not correlate. Their life schedule, their life timeline may not correlate with what's going on in the stock market. So, yeah, it can be frustrating for retirees. What's their portfolio worth when they're the day they retire? It varies.
hmm And now I want to talk about behavioral finance, one of your favorites, right? I'm a smart guy, Winston. Why do I make irrational financial decisions?
Because you're greedy. You're a smart guy who's greedy, and you make irrational decisions based on your greed. So
Mhm.
you hear, the water cooler talk that XYZ stock or some market segment is really doing well. In fact, it's been doing well for the last year. And so you think this is the time for me to get in. But you know what? The time for you to have gotten in was maybe a year ago. You
Right.
missed the curve. So you'll see what most Americans tend to do is they buy when something is hot and it's already starting to reach the apex right
hmm
about the time the average American buys in. Well, what happens is they get in. I mean, the quickest way, people have said to me, the quickest way for me to lose money is to buy a stock, right? Because the next day it goes down. They buy it at the apex and it starts to drop. And so they sell and they lose money. And then the market is bad. Okay.
That's
You
right.
got to kind of try to avoid the peaks and valleys. You want to
Right.
level it out over time.
Stick with the plan, right, Winston? So if somebody wants to talk to you about creating that financial plan, what's the best way to reach you?
602-456-1928, 602-456-1928, or you could visit us online at winstonandcompanies.com, winstonandcompanies.com. And on there's a Calendly link. You could schedule an appointment or just reach out to one of our staff. We'd love to visit with you further.
I always love talking through the headlines with you, Winston.
Yes,
Thank you.
ma'am. Great seeing you again.